Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Saturday, August 17th, 2024. Hey, I hope you're doing well. I appreciate coming to my weekend review podcast this week, and I hope you're going to learn a lot. And the format for today is, first of all, we are going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at all the trades that I made last week. We're going to talk about when I entered the trade, why I entered the trade, what the setup was, what the signals were, where I place my stops, how I'm going to manage the trade going forward. And then I did close some trades out. I still have some trades that are open, so we'll go through all those, see how we're doing. After that, we're going to talk a little bit about trader psychology. Really, honestly, the most important skill in trading is the ability to create a plan using good trading rules, which mean good risk to reward ratio, confluence of signals lining up, um, uh, and where to place your stops, all that kind of stuff, and then following your rules. You have to have if-then statements. If this happens, then I'm going to do that, but if that happens, then I'm going to do this. And really, it's the most important skill in trading, everyone, is the ability to create a plan and follow your plan without having any preconceived ideas about where the market is going to go. You just don't know where the market's going to go. So, and that's what I'm going to touch on when we get to the trader psychology part. All right. After that, I have gone down through my master watch list, both on the daily time frames and the weekly time frames, and I have identified some potential trades next week. They're not where they're supposed to be. If they were, then I probably would have already taken the trade, but they're not there yet. But I always like on the weekends to go through my watch list, identify levels like, hey, if this stock gets there, that would be a lot of confluences. That would be a lot of things lining up. The stars would be aligning there. And if it gets there, then I'll consider taking the trade. If it doesn't get there, then I'll just move on to another market. But it's important when, things are relaxed, the market's not open, lights aren't blinking red and green, to identify a level. And if it gets there, you'll be amazed how many times, if you're patient and you wait for it to get there, how many more times that trade's going to be profitable compared to just taking something randomly. All right, so I have them on both on the dailies and the weeklies, and I'll just go through and kind of give you my thinking of if they get there, then I will consider taking the trade. So I hope the podcast is going to be helpful for you. I hope you're going to learn something. If you do and you find it of value, I'd really appreciate it if you could hit the thumbs up button. Really helps out the channel, lets YouTube know there's some valuable content here, keeps the podcast alive. And if you haven't subscribed, I'd appreciate if you do that as well. I do, when I can, do some daily short videos of my day trades using the same strategies, but on a much shorter time frame. All right, so let's get started with U.S. legal disclaimer. I'll be back in about 40 seconds and we'll get rolling.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, let's get started on the current positions. These are the Qs, Q, Q, Q. I did enter the Qs back here on the 5th of August. Why? Well, I talk about the importance of a confluence of signals happening at the same time, and there were a lot of them on the Qs. First one, this is a deep dip buy, by the way, a deep dip buy strategy entry. Notice the black line here. This is the 200-day moving average. This is an important level that a lot of large financial institutions and savvy traders key off of. And during the day, we went below the 200. Intraday, we went below the 200, but we recovered and closed above. That by itself is a legitimate signal. But there were more. Also, during the day, we went under the 30 RSI and closed back over the 30 RSI. Again, legitimate signal by itself, but the two together are much better. So an intraday rejection of the 200, intraday rejection of the 30 RSI. In addition to that, you see this line here. This is a long-term trend line. And during the day, we opened up below it, but we closed above it, which is important. The market said, okay, there were no more sellers down in this area. No more sellers under the 30 RSI, no more sellers under the 200-day moving average, no more sellers under the long-term trend line. So AAA rated entry signal. So I got long here, 435.31. So the first thing I do when I get long is I position size based upon the volatility of the market. I take 1% of my capital, I divide it by the value of the two ATRs. That shows me how many shares to buy. Secondly, I place my emergency stop 2 ATRs below, exactly 2 ATRs below my entry, so that if it does go down and touch that at any point during the trade, I'm immediately out. I don't wait for the end of the day. I just get out of the trade. And if it does get there, then I know how much I've lost. I've lost 1% of my total trading account. The good news is this doesn't happen often. It only happens about 5% of the time. 95% of the time, your end of day stop or your end of bar stop will trigger. And for me, this is a close below the 200-day moving average. So 95% of the time, a close below this 200-day moving average or whatever your stop is, depending on the strategy, 95% of the time that's going to happen. Only 5% of the time am I going to hit the emergency stop. But it does happen. Last week I had one on this particular day on NVIDIA, if you remember. Okay, so we see the confluence of signals, under 30, over 30, under 200, over 200, uh, uh, under, back over the long-term trend line, got long, 435.31, placed my emergency stop 2 ATRs below, placed my end of bar stop just a close below the 200-day moving average, the black line. Now I have this line up here. This is 1.5 ATRs above my entry. This is my trailing stop mode. If it gets to this level, then I go into trailing stop mode, which just means that nothing happens. It just means I'm in trailing stop mode. And it means that now if I have a close below a previous bar's low in the future, I will exit half of the remaining positions as a precaution. Because as long as it keeps going up, great. But if we do, say Monday, we get a close below a previous bar's low, well, something's kind of changed, right? We've had the ability to close below a previous bar's low. A little change in the sentiment doesn't mean it's going to go straight down, but if it does go down, it will have started with a close below a previous bar's low, most likely. All right. So if that happens, I'm going to sell half the remaining positions. So the emergency stop, the end of bar stop, going into trailing stop mode, these are all defensive maneuvers. If something goes down, then I take action. But I also play offense. And it's important to play offense and defense in trading, at least in my opinion, where if it moves up a certain amount from the previous bar's close, I'm going to take some partial profits into the strength. So let me give you an example. Right now, we close at 475.03. So I will have 3 limit orders in the system for Monday. I will take the closing price, 475.03. I'll add the value of the 0.45, which is now 525. So I'll add 475.03 to 525. That will be my first profit target on Monday. I'll take my first profit target, add the 0.45 to it again. That will be my second, and I'll do it one more time to get my third. Now, how much do I sell at these 3 profit targets? 10% of the remaining shares that I have at the moment. All right, so that's playing offense and defense. So when I entered, the next day moved up strongly. Intraday during the day, I took some, I think I hit 1 profit target, maybe 2, I can't remember. Next day we had a move, or we gapped up, I hit another profit target. And then each day as we've moved up, This was a two profit target day. I don't think that was anything. That was anything. I think that was a proof two profit target day. Next day, nothing. Next day, two profit targets. So I'm phasing out into strength. All right. I'm reducing my position size into strength. Now, the remaining shares that I have left, again, on Monday, for example, if we close below Friday's low, I'll just take exactly half off. If we keep going up, I'll just continue to scale out on the way up. If we get into the 65 RSI level right now, we're at 57.02. If we get to 65 RSI level, then I have some other rules that kick in. If we reject the 70 RSI, I have some other rules that kick in. So I've got a lot of rules, but I have a lot of rules from 29 years of experience. And, it may seem complicated at first, but it's really not. And I guess this is a good time to mention that, if you're interested in learning to trade like I trade, I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I've taught students from all over the world. I teach them really good things step by step. So if that's of interest to you, my email is in the link at the description. Just send me an email. We can get the conversation started. And love to teach you everything I know. And when you're done with that course, I know you're going to be a much better trader and have a really good skill that you can use. All right. So anyway, so far, really good. I mean, I did not expect this to happen, but again, the market doesn't care what I expect at all. And this particular trade, so far, the remaining shares up 8.33%. Unbelievable. Unbelievable. Okay, next trade, UNG. UNG is a different type of approach. It is called a bullish abandoned baby. And if you'd like to learn more about abandoned babies or island reversals, they're very similar. Go to my YouTube channel. I have a good video there that talks about why this is one of my most favorite new trading approaches. And I use it, and I've had two really good trades that we'll go over today on this. But excuse me. You can see this highlighted green box down here. What is this? Well, look at the previous day. You see how he gapped down? So overnight, for whatever reason, the news was bearish, and we gapped down. However, the very next day, we gap up. So we have a gap down and a gap up. This makes this an abandoned baby. From very, very bearish sentiment to very bullish sentiment very quickly. In my experience, when this happens and you look out into the future, you're probably going to be higher. I mean, certainly it can go lower, but more times than not, it's going to be higher. Now, it gapped up. I didn't buy it at the open, but when you have an abandoned baby, the top of the abandoned baby is a very important level. So it gapped up, it came back down, tested that level, and I got long here at 1309. Now, on this particular type of trade, I don't scale out. It's basically a set it and forget it type of trade. What I do is I place my stop 2 ATRs below my entry, which is a 2 ATR stop. Now, using good trading principles, if I'm risking 2 ATRs, I want to make at least 4 ATRs to the upside. So that's what I did. I placed my profit target at 1558. So I have two potentials here. One, I'm going to lose 2 ATRs, or two, I'm going to make 4 ATRs. And the good news, in my experience, with these abandoned babies and island reversals is about 70% of the time, I hit my 4 ATR profit target. 30% of the time, I hit my 2 ATR stop. They're not always going to work, but they work more than they don't, in my opinion. So if approximately 70% of the time I make twice as much as when I lose, that's a pretty good proposition, right? So anyway, you see we're down on Friday, and we got kind of close to it, but we didn't quite get there yet. And so I'm just going to let this play out. It's either going to 2 ATR stop, 4 ATR profit target, that's it. And this particular trade, still doing well from entry to current price, up 7.04%. Okay, Microsoft. Microsoft is again a deep dip buy strategy. Hence the 200-day moving average, the black line here. So I got long on the 9th of August because the previous bar we closed below the 200. On the day that I entered, it closed above the 200 at 406.02. So again, I position size. I placed my emergency stop 2 ATRs below. My end of bar stop is just a close below the 200-day moving average. So it's a very good risk to reward ratio. I placed my trailing stop level 1.5 ATRs above. And if it gets there, then I go into trailing stop mode. And you can see it did get there. So I am in trailing stop mode now. So Friday, we almost closed below the previous bar's low. Had that happen, I would have sold half my position, but it didn't. It recovered and held the previous bar's low. And then in addition, as it moves up, if it moves up the value of 0.45 ATRs, I'm going to take 10% off, right? But I always of my remaining shares. So next day it didn't do much, but it held above the 200. The next day moved up, took some profits, hit some profit targets. Next day moved up. Next Thursday moved up again, hit some profit targets. No profit targets on Friday, obviously, because it was down. But I am in trailing stop mode, so if I get a close below previous bar's low, I am just will sell half of the position. Then, of course, if it closed below the 200, I would be out of that as well with the full position. But this particular trade doing pretty well, up 2.92%. And again, this is a deep dip buy. Okay, so I believe those are the open profits, or I'm sorry, those are the open positions that I have, the Qs, UNG, and Microsoft. Now let's go to the closed positions that I closed out this week. Okay, so I was talking about bullish abandoned babies. Well, you can see we gap down followed by a gap up. So that is a bullish abandoned baby. Just like here, look, we gapped down, we gapped up. Was that a good trade? Yes, it was. I took that trade. Same thing, gap down, gap up. Remember, the top of the abandoned baby is some real support. So I entered here on the 29th of July at 219.26. And again, this is the set it and forget it. 2 ATR profit target, 2 ATR stop below, 4 ATR profit target above. Set it and forget it. Moved up nicely, pulled back down. But look at that. On Friday, it did hit my 4 ATR profit target. So again, I was risking 2 ATRs to make 4 ATRs. And like I said, in my experience, when you have these approaches, they work more often than they don't. So great. Now look at that. Out of the trade for a gain of 4.82%. So I made twice as much as I was losing. Now the money that I made from this trade, I can have 2 losing trades if I have another abandoned baby or island reversal, just based upon what I made on this trade. So it's really nice trade here, up 4.82% on the bullish abandoned baby. And then last but not least, Apple on the daily, by the way. This was a losing trade. I did short Apple here on the 14th of August. Why? It's a good setup. We had this overhead trend line, which got rejected. And we were also in a bearish order block. Here's the highest up bar close before structure break. So really good signal. It just didn't work out for me. I got short here 221.60. My emergency stop 2 ATRs below, and my end of bar stop was simply a close above this trend line. And Apple was just too strong. It closed above the trend line 224.80. I got out for a loss of 1.38%. So it's fine, small loss, it's fine, and I followed the rules. And good thing I got out because it was up again on Friday. So those are the daily, the open and the daily. QQQ currently up 8.33%, UNG up 7.04%, Microsoft up 2.91%. Closed positions closed out gold for a gain of 4.82%, and Apple have had a loss on the short of 1.38%. Okay, let's go over to the weeklies. I had a weekly trade over on Disney. And why did I take the trade on Disney? Well, the previous week, I don't know why that bar is there, should be here. We had an under 30 over 30 on the weekly. During the week, it went under 30, closed back above 30 RSI. I got long here at $85.90. So I placed my emergency stop, as always, 2 ATRs below. Now, my stop on this, my end of bar stop on the weekly is based upon the monthly. Do you see the 200 month moving average here, the black line? Last time we tested it, boy, it just took on off, didn't it? So what makes sense to me trading on the weekly is a close below the 200 day, month moving average, which is $82.92. Okay, so again, I entered the trade because an under 30 over 30 on the weekly got in at 85.90. Placed my emergency stop 2 ATRs below, but my end of bar stop is simply going to be a close below the monthly 200, which is 82.92. So next week, if it closes below 82.92, I'm simply out of the trade. And this particular, and I did hit one profit target, by the way. You can see the 0.45 ATR is 2.18, and it was up 3.08. So I did hit one profit target, took 10% of the shares that I have off, which reduces the amount of shares that I have. So if it does turn right back around, at least I've locked in those profit targets and reduced the position size. And if it keeps going up, I'm glad I still have some. So this particular trade currently up 3.68%. So pretty good week, and all sorts of different trading approaches. We had deep dip buys, we had abandoned babies, and they worked out. So I'm grateful for that. So all right, let's talk before we get to the potential trades for next week. Let's talk a little bit about trader psychology. Okay, this is from Stephen Goldstein. Really like Stephen. Has a great podcast called Alpha Mind, where he interviews all sorts of different traders at all different levels all around the world. I was fortunate enough to be a guest on his podcast twice and be interviewed. That was a lot of fun. But he's a retired trader. He's a world-class trading coach. And let's talk about his post here. One of the most powerful things in trading, an open mind. Short and simple and to the point. But everybody, this is so important. I was talking earlier about how surprised I was that after the shellacking that the market took, how we could just rally back up. I would have never in a million years thought this would have happened. Never. Got to be totally honest. I was totally wrong on what I thought. But the key is we're all going to have opinions about the markets, and having an opinion about the market is one of the worst ways to mess yourself up in trading. That's why it's important, like I mentioned at the beginning of the podcast, to create a plan and follow the plan and follow what the price action is doing, not what your idea of what the market's going to do or your bias for the market or your predictions for the market. Because so many times the market does what it's going to do, and the market's always right. You are not always right. You can have those opinions, but I could be as bearish as possible. But if I'm in that deep dip buy trade on the Qs, every fiber in my body just wants to get out of the trade. We're too high, we're too high, we're too high. Well, the market doesn't care. It just keeps going up. So the best advice I can give you, just from the experience of trading as long as I've had it, going through all sorts of different scenarios, come up with your trading plan, come up with your trading strategy, and just follow it, regardless of what you think. You're going to be wrong so much more than you're going to be right. The market does crazy things. So back to Stephen's post, you got to have an open mind. You got to have an open mind. And it's so much easier and such a much more holistic way to trade if you just get your thoughts and your biases out of your mind and just follow what the market is doing. And look, the market can go up way longer than you can think. The market can go down way longer than you can think. Keep an open mind to the market can do some crazy things. And if you're struggling with it each day, should I do this? Should I do this? Is it too high? Is it too low? Just wait for the signals. The signals really, in the long run, are going to be your best guide. So keep an open mind. The market can do way crazier things than you can ever imagine. And if something's moving your way, first of all, congratulations. Secondly, don't get in there and muck it up. Have your rules, have your process, and follow what happens in the price action. That's the only thing that's important. Your opinions and your biases don't matter. So keep an open mind. And I think at the end of the day, you're going to be a much more successful trader by just keeping an open mind and following that process. So thank you, Stephen. You can follow Stephen at AlphaMind101 over on Twitter. Okay, let's talk about potential trades for next week. Again, these are not where they need to be yet. And if they were, like I said, I would have already taken the trade. Now, by the way, on the dailies here, I have 9 potential trades. So theoretically on Monday, right, all 9 of these trades could trigger. Does that mean I'm going to take all 9 of them? No, I only take 1 trade per day. Even if all 9 trigger, I only take 1 trade. And I take the 1 trade that has the highest quality score. So how do I determine what the score is? So how many confluences, signals, entry triggers does it have happening at the same time? Remember Qs, under 30, over 30, under 200, over 200, under, over the long-term trend line? Well, there's 3 right there. Literally just give a point to that. Okay, this one has 2, this one has 3. I'm going to pick the one that has 3. In addition to that, which one has the best risk to reward ratio? I also have to factor that in. Which one looks best on multiple time frames? You know, if I'm trading the daily, I also look at the weekly to see what's happening on the weekly. Were there signals on the weekly at the same time they were on the daily? If they were, that adds bonus points to them. Also, the relative strength of that market. If the market's down, yet the market that you're looking at triggers and it's up, well, it gets bonus points for that as well. So that's very important. The devils are in the details as far as being able to determine, okay, I have 5 here that triggered, which one do I take? And again, this is what I teach in my private one-on-one course that I teach online. I teach you how to determine these things and come up with the best one. We do 15 hours in this course every once, so there's a lot of hours. We go through a lot of things, all the setups, all the strategy, all the rules, and this, how to determine the best one. And so it's important. So again, there's 9 here. If they all trigger on Monday, I'm not going to take 9. I'm going to narrow it down to the best one. Okay, so let's get started here. AMD. Well, you see the red box up here that probably already gives you a clue that I'm looking for a short. Now, the confluence here is, do you see the gray line? This is the 50-day moving average. The black line is the 200-day moving average. You see how we just crossed under? This is called a death cross. Horrible name, I know, but it's called the death cross. Alternatively, if it crossed back over, that would be called a golden cross. But what I have noticed with golden crosses and with death crosses is that, in this case, is the death cross. We have a close below. Do you see how the 200, you can see it closed under. If I get a 50 closing under the 200, or in other words, a death cross, I have noticed that when that happens, the first rejection of the 200 day moving average, that's a good short with a good risk to reward ratio. Alternatively, If you have a 50 closing over the 200, then the first pullback to the 200 is a good buy. But in this case, the 50 is crossed under the 200, so therefore the first rejection of the 200 offers a pretty good short signal. So we're not there yet. I don't know if we're going to get there yet, or if we're going to get there. But if we do get there and, this week go up, reject that 200, then likely I'll take the trade. And the nice thing is I'll have that 200 there as my line in the sand. As long as it's under the 200, I'll stay in the trade. But if it closes over the 200, I'm simply out. And of course, I'll always have my 2 ATR emergency stop above. So I'm looking for a trade, if a short trade on AM day, if and only if next week, if we have a close above, close below the 200, or an intraday rejection of the 200, or a bounce, we go right up to the 200 and go back down. That's what I'm looking for. But the confluence here is I'm looking for a rejection of the 200-day moving average because we had the death cross recently under. Make sense? All right. And if it doesn't get there, I'm just not going to mess with it. ARCC, Ares Capital Corporation. Okay. Well, a lot of things going on here, by the way. You can see this red box here. Again, this is a short that I'm looking for. Here's a big up bar before we change market structure to the downside. And market structure to the downside means we had a high, pullback, higher high, and then we broke this structure. So this, although this looks quite bullish, to me is still in a bearish market structure. So I want to short a rally. Now, there's multiple ways that I could do this, that I could go about this. One, if it gets to the bottom of the box and rejects it and comes back down, that's a legitimate entry as well. The only problem with that, though, is that my stop is way up here, so there's a lot of range. So what I'm going to do on ARCC is, you see the red line here? This makes sense. Why? And what is that line? That line is halfway at this huge big down bar on the 31st of July. See the big down bar? Well, if we rally back to halfway at that big down bar, there will probably be some inherent resistance there. So that would make sense, and it's closer to this swing high here, so it would make my risk to reward ratio better. So big down bar, getting to halfway of that, there's going to be resistance, and also the entire height of the order block here from about 2090 all the way up to 2130 is a bearish order block. So that is the confluence of signals. So it could just touch the bottom of that and head back down. If it does, oh well, I'll miss the trade. But what I'm looking for here on ARC is a rejection of 2107 next week, halfway the big down bar, and it's also in the bearish order block area. All right, so that's what I'm looking for on ARC. FXY. Okay, so we were talking about abandoned babies and island reversals. This is an island reversal. Why is it an island reversal? This is the Japanese yen, FXY. Well, we gapped up, boom, had one day sideways here, and then we gapped down. This is bearish. This is bearish, that's why it's red. Here, look at this. Gap down, gap up, bullish. Was it right? Yeah, I'd say so. So, remember that I said on abandoned babies and island reversals that the bottom of the island reversal, or the bottom or the top of the abandoned babies, is either really good support or really strong resistance. Well, this is a bearish island reversal, and the bottom of that there is 63.55. So if we get up to 63.55, that is going to be a lot of resistance because of the bearish island reversal. So if we head back up there, 63.55, I will consider taking a short on FXY. And again, with abandoned babies and island reversals, 2 ATR stop above, 4 ATR profit target below is how I'll set this up. And it'll be one or the other. So it's not there yet. You can see, look, we had a bullish baby on FXY in the last 3 days. We gapped down, then we gapped up, making this a bullish baby right here. So kind of the two different things going on here. We have a bearish island reversal, bullish abandoned baby. But if we do rally up back up to 63.55, I will definitely consider putting on a short with a 2 ATR stop and a 4 ATR profit target. Google, GOOGL. Okay, so Google not quite as strong as the rest of the market by far, but what I'm looking for here on Google next week is a rejection of the 200-day moving average. This is the black line. What's the confluence? Well, the confluence is, for one, a deep dip buy at the 200-day moving average, and two, this is a bullish order block lowest down close before market structure change. So you have two of those at the same area there. And you can see I drew this from previous podcasts, this green box, and look, this is exactly where it got to before it bounced just by itself. So these things have memories a lot of the time, and you can see anywhere in that green box would have been a good place to buy it. But as going forward from like a AAA rated approach would be Google with a rejection of the 200, because at the same time it is inside this bullish green box here. So that is what I'm looking for. Don't know if it's going to get there. If it doesn't get there, I'm not going to mess with it. But if it does, I'll consider taking the trade. Goldman Sachs. All right, Goldman Sachs, red box here. So what I'm looking for is a short position. Here's the highest up bar close before market structure change. This area inside the red box should be resistance area. Don't know if it's going to work or not. I did not take the trade on Friday, but what I am looking for is, do you see the trend line here? We connect these lows. So this trend line is still above us. That is going to act as resistance. And what I'm really looking for on Goldman Sachs here would be a rejection of the top of the order block, looks like 517.14. And the confluence is, it would be the best risk to reward ratio, top of the order block, and it would dovetail with this trend line that's above as resistance. So again, it might just fail at the bottom of the order block and head down. And if it does, oh well. But if it does continue to rally, a rejection of the top of that order block and this trend line would make for a really good short position. Don't know if it's going to work, but big picture, there's a lot of signals here of rejection that it would hit, and it gives me a very good risk to reward ratio, which would make sense. So I'm looking for a short on Goldman Sachs. Basically, kind of needs to reject 517.60 for this to be a legitimate trade. IBB, iShares Nasdaq Biotech. Very, very similar to Goldman Sachs. Here is your order block, highest up close before market structure change. Now this one doesn't quite have the range that scares me as much. So if we do go up and reject the bottom of this order block, 147.54, that may be enough just to get me into the short position. Or anywhere in this red box. Ideally, I'd like to see it get in the red box and then turn down. That would be good. But the nice thing about this is that my end of bar stop would just be a close above this high here at 150.17. So with these, it's hard to just say this is exactly the point that I'm going to get short. I kind of have to see what's happening. So the potentials there are rejection of the bottom of the order block, 147.54. Maybe some kind of reversal in the bearish order block would also get me in the trade. Or the third option would be a rejection of the top of the order block, the rejection of like 149.61. That might also be a potential signal. And then my stop would just be like a close here of the high, 150.17. So that's what I'm looking for as well. MO, Altria. Wow. This stock, I'll tell you what. Okay, so we have two things going on here, and they both have to do with trend lines. So here is a long-term trend line that connects this bottom to this bottom. You go out into the future, that will probably be some type of resistance to the price. In addition to that, from a channel trend line, you take this high, draw those out into the future. And do you see where they intersect here? When multiple trend lines intersect at the same location, that's a pretty strong area. So I don't know if MO Altria is going to get there. I don't know. I just don't know. But next week, if we do reject this bottom trend line, I would consider taking a short there. My stop would just simply be a close back above. That's it. Good risk to reward ratio. However, if the stars line up and we get up here to about 53.35, that's going to be a major point of resistance because we're coming up to the trend line above us, which is resistance, and then you're drawing out into the future here this channel trend line, and they intersect right here. So I think there's not a very good chance we're going to get up there, but then again, what do I know? We could, but if we do, and we get to that intersection right there, 53.35, that would be a major long-term trend line, and if it rejects it, I would consider getting short. Pfizer, okay. Well, what did we talk about? Oh, we talked about AMD, where the 50 crossed under the 200, and so the first check back up to the 200 is a good short. This is the opposite. Look, this is Pfizer. Here's the black line. Here's the gray line. See how we crossed over it? That's a bullish cross. That's called the golden cross. So if you have a golden cross, then the first move back to the 200 is generally a really good area to buy at the 200. Yes, it's bouncing off the 200. That by itself is good. But the confluence is a bounce off the 200, but you also have the golden cross going for you. And again, you can see the 50 crosses over the 200. So the first pullback to the golden cross at the 200 is generally a pretty good area. Not all the time, but generally. So I'm waiting next week to get long Pfizer. I really would like to get long Pfizer, actually, but it has to be a pullback and some kind of rejection of the 200-day moving average. Okay, last but not least, Tesla. This one's pretty simple, deep dip buy. We've closed over the 200-day moving average, which is good. But I'm not going to chase it here. I didn't take it on Thursday because the risk to reward ratio wasn't too good. We were pretty far away from the 200-day moving average. So what I'm looking for on Tesla, if and only if we get a pullback to the 200 that gives a good risk to reward ratio, then I would consider getting long Tesla. So those are the dailies. Let's take a look at the weeklies. Weekly bars close on Friday, so I would make my decision on these next Friday. Okay, this is Rio Tinto. Talked about this for a while. I said, look, if we get down to the 200-day moving average, I may consider buying it. We're not there yet, but I want to point something out. If you're looking for an entry based off the 200-day moving average, kind of a pro tip is look back in time. Last time you were at the 200, did it respect it? It danced around here a little bit, but yes, ultimately that was the level, wasn't it? So it doesn't mean that this time, if we get to the 200, it has to hold. Certainly no guarantees of anything. Excuse me, but it increases the chance that if it respected it in the past, it will respect it this time. So next week, if we reject the 200-day moving average, I will consider taking the trade. It's a weekly trade, so I'll have to hold it the whole week. If it closes on Friday under the 200, that would be my end of day stop. If it holds and keeps above, keeps moving up, well, then you know what I do, right? I scale out, get to trailing stop level, blah, 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 all that kind of stuff. So that's what I'm looking for on Rio. And then last but not least is VIX. Oof, my gosh. Look at VIX, everybody. Nobody wanted it. Nobody wanted it. Nobody wanted it. Nobody wanted it. Everybody wants it. Everybody. It doubled. It freaking doubled. In a 2-week period, it doubled. And now look, nobody wants it at all. I like things where nobody wants it as long as there is a legitimate signal. And there is a legitimate signal, but we're not there yet. You can see the green highlighted box. What is that? That is the lowest close before market structure change. So if you have we certainly move to a bullish market structure, I would say. So if we come back down, if VIX comes back down, you have the bullish order block here between, I think, 41, well, here it is, 41.88 and $40. This is, for me, this is the buyable area. And the nice thing I like about this is it has a really good risk to reward ratio. My end of bar stop would simply be, it would have to close and make new lows. But incredible chart. Double in 1, 2, 3, 4, over a double in 4 weeks. We've almost given it all the way back. Incredible. But MACD is still positive. And I'll show you when we're done here, I'm going to show you a little bit on the SPY and the Q chart to kind of give you an idea of the market in general. But we are coming into some pretty significant resistance levels. And on the VIX here, we are coming into some pretty significant support levels. So really, I'm interested in this VIX trade. We had all sorts of volatility. It was erased, but we are coming to a really good point here, bullish order block between 41.88 and $40. So next week, if we bounce off 41.88, I will consider getting long. I really will. Or if we close in the bullish order block, or if we reject the bottom of the order block too. But I think for me, there's a lot of opportunity in this VIX trade because it's so, after being so in demand, now nobody wants it. But we're getting down to historic levels where it generally bounces anyway. So I really like this area to get long on VIX, 41.80, 41.88 to $40. And the stop would simply be a close below the low here. All right. So let's talk a little bit. Let's just look at the markets in general from a technical standpoint, the way that I look at this. And, I think by anyone's imagination, we're stretched, right? We're stretched a little bit. But let's look at this big down bar here on the 1st of August. Well, big down bars like this do tend to hold some memory. And you can see on Friday, we did get above this high, but rejected and closed below. It's a little bit of a warning sign. In addition to that, this long-term trend line here, I mean, if you go way back, you'll see it's a long-term trend line. But we are we're getting close to that long-term trend line as well. And that long-term trend line is resistance above us, right? I'm long the Qs, but this concerns me right up here. So if we reject this long-term trend line, I think there's more of a chance than not that will probably mark the intermediate term high. And again, remember what I just showed you on VIX. We're getting very low on VIX again into that buyable area. And most likely, if we reject this trend line and go down, VIX will go up. So the way that I look at the markets, they're kind of confirming that, yes, the market's getting into some real potential resistance and the VIX is getting into some real potential support. So this long-term trend line that's above us and acts as resistance, that's going to be a key level. And the other level too was the high on August 1st of, where is it? 475.55. And we did get there already and rejected. So I think this rally's getting a little long in the tooth from a technical standpoint. So like I mentioned, everybody, be very happy to help you with lessons. I love to teach. I think I do a really good job of it. I teach really good approaches. So if you're interested in my course, it's 15 hours. There's 5 sessions. Each session is 3 hours. That's where you get the 15. I teach you all the approaches step by step. We do all sorts of simulation trades. So that I'm not going to let you go from that course unless I know you know exactly the rules and how to trade. Another option to be able to learn more is I have a really good online video course at udemy.com. The link is in the description of this video, where I teach you step by step the deep dip buy approach. And many of the trades that I showed you today were dip buy approaches. It's a great course. I've sold so many of them around the world. It's super affordable. It's somewhere between $30 and $50 at Udemy. 9.5 hours of content, 26 videos, 15 study guides, and I think it has 4.9 stars on the course. So people really like it. You're going to learn a lot. It's a very good and affordable way to get started to learn one really good trading approach. So anyway, that's about it for today. Like I said, if you like the program, you found value, appreciate it if you hit the thumbs up button. And last thing, always, please try to go out and do something nice for another human being today. Really would make the world a better place if we could all do that. You appreciate it if somebody does the nice random act of kindness for you. So why don't you go out and do it for someone else? And if you could do it for animals as well, that would make the world just even a better place. One nice thing for a human, one nice thing for an animal. What could it hurt, right? It's only going to help. But I really appreciate you being here. I hope you have a good weekend. God willing, I'll see you next week. But if you have any comments or questions, put them in the comment section. I'll do my best to get back to it. But thanks for your time. Enjoy the rest of your weekend, everyone. Take care. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.